Hey everybody, Jamie here. Hope you guys are doing well. Today is Friday, April 2nd, and this is our stimulus update and Q&A for the week. So every single Friday, I'm here at 1:30 p.m. Central Time, pretty much every single Friday. And I am giving you updates on all things stimulus. So we're talking about PPP, EIDL loans and grants, unemployment, employee retention tax credits, other tax credits that you can get. These are all that stimulus money we're here talking about, and I'll give you updates and also take your questions. So I have a couple of things that I wanted to update you guys on today, and then I should have some time towards the end for questions as I kick my my camera. So we are live, obviously, in my Financial Literacy for Women Business Owners Facebook group. If you're not a member, come join us at jamietrull.com/group. Also, I am live on YouTube right now. Hey, my YouTube subscribers, if you are watching me, make sure to like and subscribe so that you don't miss when I go live or post new videos. Okay, so what's going on today? Let's talk about it. Today, there are 3 topics I wanted to cover, and these are based off of either changes that have happened or questions that we continue to get within the group. And so I want to make sure to be able to give you answers to those questions. I'm looking now to see. Yep. Okay. So the 3 things that I want to talk a little bit more about are the PPP covered period. I've got lots of people, especially self-employed people, who are asking questions about what the covered period is. Is it 8 weeks, 10 weeks, 11 weeks, 24 weeks? There's all these numbers floating around. What do they mean? So we're going to talk about the covered period, not just for self-employed, but there are some specific things to consider for people who are self-employed in that decision-making. Also, we're going to talk about the EIDL targeted grants. So some new news, slightly new news on that I want to go over. If you've got an email about it, I want to tell you kind of my thoughts on the subject. And then we're going to talk about the EIDL loan. So there's been some changes to the EIDL loan. If you already got one, you're going to want to hear the changes because most of them are actually preferential. And so you want to know what is going on. All right, so those are my 3 main topics. After that, I'll take your questions to the extent that I have some time. Okay, so I'm going to jump in first. Well, let's first talk about the PPP covered period. I'm going to see if I can pull up the let's see, the website really quickly. If you guys ever are looking for something, by the way, if you go to treasury.gov and then go to the COVID-19 relief, you can find a lot of information out there specifically on PPP, but also on some of the other programs as well. So let's see really quickly. I'm going to jump into, which one was it? There's about 1 million interim final rules. For those of you guys who are following this whole thing closely, I think it was this one. I think that's right. Hang on. Let me just check. All right, guys, I had this pulled up and then it disappeared. So what we're going to talk about is the covered period. So originally, I'm going to kind of tell you how this has changed over time. Oh, I can't find the one that I was looking for. I can't find it. Anyway, we'll talk through it anyway. So the thing with the covered period, when you have a PPP loan, you can choose a covered period. And this is important also when you're looking to maybe get a second loan, like maybe you didn't get your PPP loan until this quarter. And so you're looking to potentially, now that they've extended the deadline through May 31st for PPP, you're looking to potentially get a second one. Now, I personally don't think funds are going to last through May 31st, you guys, just as an FYI. So if you're sitting and waiting on applying for your PPP loan, you want to make sure that you do it. But also, if you're a person that got a first one like a couple of weeks ago, I think it's going to be tough for you to get a second one. Not impossible. We'll see how this all shakes out, but I think it's going to be a little bit challenging. So here's the thing with the covered period. Let's kind of, we're going to go back in time. We're going to like transport back in time, we're going to do the Wayne's World thing. Anybody? Nobody? Anyway, we're going to go back in time. And we're going to remember when PPP first came out. The old days. Where the rules were immediately 8 weeks. You know why they were 8 weeks to begin with, you guys? Because somebody somewhere thought, and by somebody somewhere, I mean our government in Washington, D.C., thought, this thing will be a lot better in 8 weeks, right? Like that should be good. We just need people to not fire people for the next 2 months to save our economy, and that should be fine. Flash forward, we are now a full-on year past that time. And a lot of businesses are still struggling with this. So 8 weeks was the first rule. It said you had to spend it all in 8 weeks. You got 2.5, it was still based, it's always been based on 2.5 months of payroll. But over that 8 weeks, you had to spend it all, which meant if you were self-employed and didn't have any employees, you couldn't spend it all on yourself because you weren't allowed to basically pay yourself more than 8 weeks worth of pay. So in the beginning, self-employed people could only pay themselves 8 weeks. And if they didn't have enough other expenses like rent and utilities, which were quite limited at the time, you couldn't get your whole thing forgiven, right? Because 2.5 months is not the same as 8 weeks. And we're going to get into the conversation around 2.5 months and whether that's 10 or 11 weeks here in a minute, because that's one for, to blow your mind a little bit. So 8 weeks was the deal. Then they made a change. So they made a change in, goodness, I can't even remember the timeline anymore. Maybe May. They made a change that said, okay, now maybe the 8 weeks was a little ambitious. Turns out we're not back to normal. We're going to extend this. You can actually use PPP over 24 weeks. So now you got 2.5 months of pay that you can use over 24 weeks. Lots of rules. If you're an employer, like there's lots of rules around keeping employees and safe harbor and blah, blah, blah. But for my self-employed people, that meant, okay, well now, because I can use it over 24 weeks, right? And it was, at that time, it was 8 or 24. There was nothing in between. You have to use it over 8 or 24. But as a self-employed person, you're like, okay, well, I'll just pick the 24 weeks. And then, I'll be able to pay myself the whole thing, right? Because again, it's 2.5 months. So now if you choose the 24 weeks, since that's longer than 2.5 months, you could pay yourself the whole thing. That was like the good thing for self-employed people. Not so good for the people who originally only took 8 weeks because they were worried they weren't going to get forgiven for the rest. That kind of sucked. So that's where it was. And it was 8 or 24. Lots of conversations around what does this mean for unemployment? If I take this over 24 weeks, does that mean I can't claim unemployment for 24 weeks? It depends on the state, but ultimately my response to that was likely not, but check your state's guidelines. Although there are some articles and things like that out there saying if you choose 24-week covered period, you can't do unemployment for that whole time period. That's nowhere in guidance that I have seen, you guys. That is an assumption being made by some articles that I don't believe is true. And I do think that the rules around that actually relate back to the state. There is nothing in guidance that says, here's how you handle PPP and unemployment. The only thing in guidance about PPP says your PPP loan may impact your ability to get unemployment. That is all it says. Never have they expanded more. Because PPP is federal, unemployment is administered by the state. Even though you're getting kind of federal unemployment, it's administered by the state. So it really is on the states to make rules around, do you claim PPP over that time period? What period do you claim it over? Is it 8 weeks, 24 weeks, somewhere in between, 2.5 months? All of that's on the state. Some states have those rules, some states don't. So it's really kind of a you-know-what show when it comes to figuring out what the heck to do with PPP and unemployment. If you want to be like totally, you're super risk averse, then you don't claim them at the same time. If you are a little bit more okay in the gray, you come up with what, works for you and claim it over time. Anywho, so now let's flash forward again. So then it started out at 8 weeks, then it was 8 weeks or 24 weeks, nowhere in between. Okay. Now they changed it in December again. So now it's anywhere between 8 weeks and 24 weeks. It still starts, the time period for your covered period for your loan still starts when you get the loan. You can't delay that. It starts when you get the loan. But it can go up anywhere, minimum 8 weeks, all the way up to 24 weeks. That means you can stop the clock whenever you want. So why does this matter? Right? Why does this matter? Well, if you're an employer, it matters because the calculations you're going to be doing, if you are an employer that has to do calculations to show that you have not reduced employment or that you've hired back employees, et cetera, right? The average payroll calculation is over that covered period. So when you're applying for forgiveness, you're putting in, your application asks you, what's the covered period you used it over? So if you used it up, you want to kind of, use that up as not as fast as you can, but basically say, okay, I used it over, let's say 10 weeks, right? And then anything that happened after that 10 weeks, if you fired all your employees, that's not going to impact your PPP forgiveness. So that's one of the reasons that it matters for employers, is that that's the time period that you're calculating your average monthly payroll over, or your average number of employees over, I should say, your average number of employees over your covered period. If you're not an employer, though, why does covered period matter? Well, it matters because, remember, back at 8 weeks, they said you can't pay yourself 2.5 months if you choose 8 weeks. Right? So if you choose 8 weeks when you're applying for forgiveness, and it may be accidental, you just put in dates that are 8 weeks, right? And you choose 8 weeks as a self-employed person with no employees, you are not going to get the whole thing forgiven if you're using it all for owner compensation, right? So when you apply for forgiveness, you're going to say, here's my covered period, and here's what I used it for. If you select at least an 11-week period, and I'll tell you why it's 11 weeks here in a minute, but at least an 11-week period as your covered period. That's what I recommend. Most self-employed people just say you used it over 11 weeks, okay? And you paid yourself the whole thing. That's probably going to be the easiest. The reason that I say 11 weeks is we got to do the math here, right? So 8 weeks, we got 2.5 months worth of pay. So you may have heard 10 weeks. I've said 10 weeks before. Why? Well, because I'm thinking, okay, 4 weeks in a month, 2.5 months is 10 weeks. That's one way to do the math. But if you actually work out the number of days, let's do it here. So if you actually work out the number of days that is, or the number of weeks that it really is. So we're talking about 2.5 months, right? So 2.5 months over 12, that's about 20.83%. Let's see, times, trying to remember how to do my math right now. You guys. All right, help me out here. So let's see. So we're talking about 2.5 months, right? So that's 20.83. And then we need to know the number of weeks that is. So 20.83 times 52. That's the number of weeks technically that if you are to do the actual math, 10.833333. That's the number of weeks that equates to 2.5 months on a technical basis, right? So really, it's best if you want to use the whole thing for owner compensation, when you go fill out that application, just make sure that it's 11 weeks that you're putting in as the start and the end. It can be after the 11 weeks, right? It can be longer, but really, you only need to put it over that 11 weeks. And if you are looking to get a second PPP loan, right? My advice to you is to make sure that your covered period does not overlap. So y'all who got your first loan in 2021, right? You want to go from that date. If you're going to use it all to pay yourself, that's 11 weeks, right? That's the easiest. And then you can apply for a second. Now you can apply before the 11 weeks is up. It's just the fact that they don't want it deposited. It needs to be deposited after that time period. That's my advice. I think that is not that I'm giving advice. I'm not your CPA. Go talk to your CPA. Have to caveat that. But that is what I would do to make sure that I wasn't overlapping covered periods and I could get both of the loans fully forgiven, right? If you get them in a shorter time period than that, it could be tougher. Now, can you use your PPP loan, though, in 8 weeks as a self-employed person? You can, but you can't use it all to pay yourself. In that case, you have to have some other expenses that you're claiming with the rest of your PPP. So you can use up to 8 weeks to pay yourself. And then that other 2.83 weeks, right, is going to be something that you're going to have to pay, whatever else you have that's in the guidelines. So the guidelines were expanded a little bit. It's not just rent and utilities anymore. Now you can use it for things like software, maybe insurance, like there's, buying PPE for your business, that kind of thing. So it's a little bit broader now. That takes a little bit more documentation on the back end. Although you shouldn't have to turn in that documentation, but you're going to want to have it in case you're ever asked for it. So you still want to have support for whatever numbers you're putting in your forgiveness application. So that's why I say, be careful with your covered period. And I think that there has been some confusion around that covered period. Yes, it's going to be the same for both weeks. If you're going to use it to fully pay yourself as a self-employed person, 11 weeks is the minimum that you can do it over, basically. Okay, hopefully that makes sense. So let's see. I'm looking through your questions. No, it doesn't matter if you're working. This has nothing to do with any other money you pay. It's not like unemployment where there's a weird interplay. If you're making any other money, it doesn't matter. PPP is on its own. Let's see. I'm looking through your questions on this topic first. So a lot of states haven't. I would call, firstly, I would do all the due diligence that you can on this, right? So some states have put it in like a tutorial video somewhere or an FAQ, or if you call them, they'll make sure whatever you do, kind of document it out though, right? And then you can either, again, it depends on your risk tolerance. If you want to be totally like on the, I don't want to get in trouble train, or I don't want to have to risk paying back unemployment, right? They're not going to throw you in jail for this, more than likely, unless it's egregious, right? Don't commit fraud. But if you're doing the best you can to educate yourself and you have documentation of the proof that you called and you searched the website, you did all these things, then you can decide what makes sense to you. You can either go totally conservative and say, okay, I'm going to use my PPP over this 11 weeks and therefore I'm not going to claim unemployment. Or you can say, I'm claiming my PPP over this 11 weeks and I'm going to claim 1/11 of my PPP against my income on my certification for unemployment each week. It may reduce or eliminate your eligibility for unemployment. But overall, what you don't want to do, and again, different CPAs will have different opinions here. Some CPAs are saying differently. To me, there is risk if you get both and don't ever claim your PPP for your unemployment, and you just take both of them during the same period of time, especially now with the Line 7 rules, because ultimately, if the IRS were to go look and say, wait, hang on, like back in 2019, you were paying yourself, $2,000 a month out of your business, and right now you're pulling unemployment and PPP, and you just paid yourself $10,000 a month out of your business each week. Like they're going to look at past history and say, well, this doesn't make sense. You are having what's called a windfall, which you don't. If you're in that situation where you're making a heck of a lot more, that's when you might have some risk. Is it possible to make a little bit more than you did before and still be doing things correctly? Yes, but if you're doing way better, that can be a red flag. So again, just think about the intention of the program. If you're paying with yourself fully with PPP more than you normally would, it probably doesn't make sense to be claiming unemployment. Okay. Now, as far as how you pay yourself, so let's separate these things. I'm talking about the covered period that you're selecting when you go to do your forgiveness application, right? It says, what's your covered period and what did you use things on? That's basically what you're going to be filling out when you apply for forgiveness. That's not the same as how you actually pay yourself. How you actually pay yourself, or honestly, if you even pay yourself, doesn't really matter, although I'm still suggesting that people do the transfer from a business bank account to a personal bank account just to have it. As a self-employed person, you should not have to submit any documentation to your bank that you paid yourself anymore. But before they made that rule change and got rid of the documentation requirements, some banks were making people show proof of payment to themselves, which I have so many tirades, and those of you guys who have been around for a while know that I just think that's the dumbest thing on the planet, because as a sole proprietor, there is no taxable event when you take money out of your business. And why would they force you to take money out when you need to use it in your business to keep your business going, right? So that's what's kind of silly about it. A lot of these rules, they made these blanket rules for everyone, but they don't apply the same. They don't make as much sense for true, like small business, self-employed people. But yet you guys are under the same rules as everyone else. So that's where it gets a little bit squirrely with this, like, show proof of payment. And you're like, well, I'm a sole proprietor. I mean, what does that even mean? And so what I'm telling people to do is just move it over, either structure it out over 11 weeks if you want to, whatever time period you want to, or just take it out all at once. It should not matter. It should not make a difference. And then if you need the money in your business to pay bills, you can do a capital contribution, i.e. just transfer money back into your business. I know it's dumb, but that is just so that you have that audit paper trail in case you ever need to show it and support what you did with the money. I know. All right. You can pay yourself, but you are limited in the amount that you pay yourself. So you are limited to 2.5 months worth of your previous pay based on your Schedule C. If you're an LLC, not an S Corp, you would be looking at what your previous pay to yourself was. So what you do in that case is you're going to take your line 7 minus your payroll expenses. Okay, so line 7 minus payroll, divide that by 12 times 2.5. That's the amount of your PPP that you're getting to pay for you. Now, if you got this before line 7, then that doesn't count. This is if you just got that your loan based on line 7. If you got it based on line 31, you're going to take line 31 divided by 12 times 2.5, and that's the max you can pay yourself, up to $20,833. That's the maximum. Okay. Let's see. Yes, you can use as little as 60%, yes, for payroll. Now, this gets a little bit squirrely when you're talking about self-employed people, but yes, this rule was really made more for people with employees, okay? So this rule was really made more for people with employees, that you have to use at least 60% on payroll, which should include yourself, and 40% can be on other qualifying expenses, or you can use 100% on payroll. It depends. There's a lot of considerations on how you want to do this if you have employees. If you have employees, I want you to sit down with an accountant, because you should also be looking at the employee retention tax credit and how what you claim for PPP for forgiveness impacts what you can claim for your employee retention tax credit, okay? So that you want to optimize to be able to get as much money out of both of those programs as possible completely legally, but you have to do a little bit of strategizing around what wages to use for what. Okay. So if you haven't watched my video on the employee retention tax credit, you want to go check that out. It's over on YouTube, just Jamie Trull, ERTC, and you will be able to find it. But you want to think about that even before applying for your PPP forgiveness, because it gives you, if you haven't applied for forgiveness yet, you have some flex in the wages that you use for each program. But that is best to talk to with an accountant about your specific situation. Squirrely, some of my, I like diatribe, squirrely. I've got a lot of Jamie-isms, I guess. You guys know Fridays are my day. Like, this is the day that I tell you like it really is, because it's Friday. Let me look. I think you meant, let's see, I'm using PPP to pay myself and ERTC to pay employees. That makes sense. As long as you're not using more than, you still need to, your max to pay yourself with PPP is still $20,833, or up to 2.5 months worth of pay that you normally would pay yourself, whichever one is smaller. So that's what you're going to go with. Let's see. As sole prop, I already paid myself 1 week based on 10 weeks. No, it doesn't matter. So like I said, it doesn't matter how you actually pay yourself. You don't have to adjust anything. Okay. I don't know if you're on unemployment too. That's the only time you might want to consider how you do it, but it doesn't matter how you actually pay yourself. It's not about the cash movement, right? So the cash movement doesn't matter. It's just what you put on that form as your covered period. That's what matters. So, I think that there's this belief that, like, okay, if it's an 11-week, covered period, now that I need to pay myself equally over 11 weeks. For PPP forgiveness, that does not matter. You can pay yourself all on the day that you get it if you want to, but it's still considered 11 weeks worth of pay. That's the point. So that was the thing. There were some places that were saying you could apply for a PPP loan immediately if you're self-employed, a second one. Like, you get your first one, pay yourself the whole amount, and then apply for a second one. And then I totally disagree with that. It's 11 weeks worth of pay no matter how you pay yourself. Right? If you are claiming, when you file for forgiveness, you say, I use the whole thing for owner compensation. That's a minimum of 11 weeks. Okay. 10.83 weeks, 2.5 months, whatever you want to call it. But let's call it 11 weeks, because that's what we're going with here. You're going to want to cover that period. And then after that time period, that's when you could get a second. Yes, it's Friday is soapbox day. I need to get an actual, what does a soapbox look like? I think I need to get one and I need to stand on it. But actually, I'm not wearing like real pants, so I probably won't do that. Let's see. Okay. So I've got some videos on second draw and all of that. Second draw is basically the same as the first, but you do have to be showing a 25% drop in at least one quarter of 2020 versus 2019. So hopefully that's helpful. Okay. So I'm gonna switch gears. So that was the PPP talk around covered period, because a lot of people have been asking about that. If you have no employees, that is correct. No. Each draw, your limit is $20,833. Each draw. But each draw is separate, and each draw has to have a separate covered period. So each draw, the limit is $20,833. Pretty much every day of the week is like, I'm in yoga pants right now. I don't do yoga. I've never done yoga. I'm wearing yoga pants. Okay. Oh, thank you. I don't know which one you're talking about. I have several. I've got a lot of calculators. So I actually linked it above. I have a ERTC calculator that we were just talking about. Anybody who's an employer, you need to have that calculator. It could save you thousands and thousands of dollars, up to $33,000 per employee, y'all. So make sure to pay attention to that. I have a new EIDL calculator that came out this week too. And I have a self-employed COVID sick leave and family leave calculator as well. If you buy any of those calculators, they're super cheap. By the way, I just make them really cheap. It just helps support my business, my small business, and helps me be able to continue to create resources for you by charging a very small amount for these. But if you go check those out, they also all come with videos to watch that'll give you a more understanding of what each of those programs are and if you qualify. But yay. Thank you. That one's a fun one. That's our most popular one. Our ERTC calculator is really, really popular, and people have gotten a lot out of it. Okay. All right. Okay. I'm just going to answer this because it relates to this. Can you claim ERTC wages that were not paid with PPP, but were paid out during the covered PPP period? Yes, you can. And that's why it's so important. I use 60% of PPP for payroll within 8 weeks. But the remaining qualified expenses I used if it were spread out over the full 24 weeks. Ooh. So that's fine, but you still have to get a 24-week covered period. But yes, everything, if you used all that up, then the first 8 weeks, you're going to tag for PPP. Now, you don't necessarily have to. So that's an important point too. Because you're full 24 weeks, you can pick payroll at any point during that 24 weeks. And that can be the payroll you pick for ERTC. And the reason that I mentioned that is that can be the payroll that you use for PPP. So the reason I mentioned that is if you have a whole 24-week covered period and maybe one quarter you didn't qualify, you want, like for ERTC, use PPP. If it was during your covered period, use PPP to pay for the wages in the quarter you didn't qualify for ERTC. Okay? Some of y'all are like, what is she even saying? Some of y'all know what I'm saying though, where if you've got a big covered period, even if you used it all in the first 8 weeks, you can say, well, no, I used it the last 8 weeks. Money is fungible. If your covered period, if you're using that full 24-week covered period, you can pick any time period during that and say, this was my PPP money, right? And so it makes sense to allocate, if you have some quarters during that time that qualify and some that don't, put the PPP money, claim that as the quarter that doesn't qualify for ERTC, and then claim ERTC on the rest of it. Doesn't matter if you can claim it even during your covered period. So that's important to note. Think of it as like tagging each dollar that you pay, right? Each dollar of your wages gets tagged as either, okay, I paid this with PPP, I paid this with ERTC, or I paid this with FFCRA. Let's add another one in here, you guys. FFCRA is the Families First Coronavirus Response Act. That's COVID sick leave and family leave. So if you paid people because they were sick with COVID or had to stay home with their kids, okay? So one of those three, you can't double dip any of them, but there is a possibility a lot of people are going to have 100% of their wages in 2020 and then also even into 2021 covered by one of those three things. That means that these government programs are basically paying your employees for you, right? So that's something to just pay a lot of attention to and kind of tag, and lay it all out, right? Lay it all out. Put your payroll rewards in front of you and just tag the weeks and say, okay, here, this was paid by this. Sit down with an accountant. They can help you with this. If you guys need it, and Autumn is here. Autumn, if you want to drop Christy Stone's link as well, she's doing ERTC consultations. And one of the things that she can help with, if you want her to, is optimizing your PPP forgiveness versus your ERTC. So if that's something that you want, she has paid consultations. She's great. She's worked with a lot of members that are in this group. So Autumn, if you would throw that down here, because I see you on here throwing all the links, and I'll put it up on screen. Okay. All right. So I just took up a whole 30 minutes on that. So I'm going to quickly run through the other things that are important. EIDL targeted advances. Lots of emails came out in the last kind of couple of days. So what's happening with those, it looks like, is I think they've sent them to everybody that they know is in a low income area, or based on the address on the application, they were in a low income area. Okay. So they've sent all those out, I believe. Maybe not all, but most of those were already out. So previous to like this week, if you had gotten that email, it was probably because you were in a low income area. At least that's my understanding of what they were trying to do, giving those people precedence. Now they're sending them to everybody. That doesn't mean you qualify though. You still have to be in a low income area. So if you got that email, there is a a map in the email, and you can put your address in and see if it comes up as a low income area. Now, people have been asking, should I apply because I got the email, even though I'm not in a low income area? You can, but you're probably not gonna get it. Like they're sending these now to everybody. They're going to check that. So unless, now I don't know, I haven't gone through the application process. If anywhere in the application, and if somebody could tell me who has been through it, does it ask you anywhere if you qualify? Right? Like if you have to certify that you qualify, then I probably wouldn't do that if the map says you're not in a low income area, right? But otherwise you can try. But I don't expect that you're going to get it, because the first thing they're going to do to check is that you're in an actual low income area, right? And it's a pretty quick check. So they have the calculator in the email. I'm going to show you the email actually, because I actually got one, if I can find it, about applying. Let's see. Okay. Yeah. So here's what it looks like if you're curious. All right. So this is the email that I got. Okay. Ignore the fact that I have 9,700 unread emails, everyone. Okay. I know. And so it's going to tell you kind of, here's the new round, and it's going to tell you how to be eligible. It's going to give you that kind of, you have to also have a greater than 30% loss as demonstrated by an 8-week period. They basically make you put in all your sales numbers for 2 whole years by month. So you need to have access to that if you're going to apply. Again, is it worth going through this if you're not in a low income area? Probably not. But if you moved addresses or something like that, then maybe so. And this is, if it's not only for brick and mortar, if your home, like whatever your business is registered to, that could be your home address. If you work from your home, that would count. Okay. So this is, and then this is the map. So the map, you can click on it. It'll take you to this map. You can put in your location. This is Atlanta for some reason. The map is drawn awfully. Okay. The map is drawn terribly. It's random places. A lot of people are kind of in that situation that we're like, wait a second, like the next block over is a low income area, but not mine. I mean, I don't know what they use to draw this map, but this is the official one. There has been some confusion around the map. The reason that there has been confusion around the map is that previously, like it took them a while to do this map. So this is the official map, SBA EIDL policy map. So people were using other existing maps that we assumed would be similar, right? So there's some other existing maps for the regular SBA loan program and things like that. But I guess they decided to put together their own loan, so their own map. So this came out and superseded all of those other maps. So yeah, so this is a lot of people. There's a lot of people that were right over the line. It's kind of, I mean, I guess they have to create some sort of determination there, but yeah, it's frustrating. It's frustrating. I don't think they're going to, they might resend one. You can also, let me see what it says to do. You can log in here. You know what? If you've got, I wonder if this will work for anybody. Oh, I probably can't do this because it's got my application number on it. You need to have, if you know your application number, I wonder if this will work, you guys. Hang on. I'm gonna try to hack something here. Somebody can try this and tell me if this works. I am sharing this link. If you take this link and at the end of it add your application number, see if this will take you to the screen you want to go to. I'm curious if it does. If you know your application, and that it does require knowing your application number though. So I'm curious to see if it will work. Hang on, I'm going to try it. I'm going to backwards hack this out. No, I don't think it's going to work. Sorry, guys. But yes, I would definitely at least check your deleted email because oftentimes, unless you've trashed your whole email after you did that, you should be able to find it hanging out in your email trash. I was trying to see if I could backwards engineer this, and it didn't quite work. Okay, yeah, I'm a jack of all trades. What can I say? I probably shouldn't say hacking like in the same sentence as the SBA website. Like I feel like I just got flagged for something. Okay. Now the last thing, so that's the targeted advance update. And that's the advance. If you guys are like, what the heck is the targeted advance? That's if you got an EIDL advance last year, that was the $1,000 per employee. That was the grant. There is a program that you can increase that up to $10,000. It's still saying $10,000, but the most recent legislation I saw said 15. So I'm surprised that everything still said 10, but my email still said 10,000. So I don't know when I don't know what's going to happen with the 15. It seems like they're kind of ignoring just part of legislation or it's just taking forever to get up and running. Okay. So that's what the targeted advance is if you're in a low income area and you've had a decline of at least 30%, then you can apply for this EIDL targeted advance, but you have to wait for your link to be sent to you via email before you can do it. There's no way to do it on the website. You have to wait for them to send you the link. Okay. Yes, exactly. You'll know, I'm always here on Wednesdays. If I don't show up on a Wednesday, something is wrong. Unless I've announced it. But if I just don't show up, anyway, yes, this is where the map is for sure. SBA EIDL policymap.com. Go check it out. Super fun. You can go check out everybody's addresses. Okay. The last thing I wanted to mention is changes to EIDL. I did do a whole video on this, so I will not put a ton of time talking about this. There are two main changes to the EIDL loan program. If you got your loan last year, guess what? Yay. Instead of a 12-month deferral, your payments are now deferred 24 months. Okay. Full 24 months, 2 years from the time you got the loan in 2020. If you got your EIDL loan, this is the loan we're talking about now, in 2021, you're deferred for 18 months. So nobody is going to have to pay any payments on their EIDL loan until at least 2022. However, accountant in me has to remind you, interest is accruing. And interest will there will even be more interest and your payments will go up. Okay. So just by the virtue of the fact that they're giving you that extra year of deferral, when you start making payments 2 years from your loan date, your payments will be higher than what your paperwork currently says. If you're curious to know how much your paperwork's going to go up by, right? How much your payments are going to go up by, okay? Grab my EIDL tracker. It's new and improved. It has all the newest guidance in it. JamieTrull.com/EIDL tracker. It does all kinds of fun stuff that you can kind of put in and modify, and you can see the impact on interest if you pay your loan off early, right? Or if you want to make early payments, like an early lump sum payment, you can see the impact that that's going to have on your total interest over the loan and how quickly you can pay it off. You can play around with it. If you want to figure out how to pay the thing off in 10 years, you can play around with the calculator and figure out how. Also, the second thing that changed that is also part of this calculator is that you can now get what I'm calling a second draw, although I know that's confusing because that sounds like PPP. It's basically you can increase your loan amount. So you can get another amount potentially. This is another one of those, they'll probably reach out to you. This is starting next week. You may start getting emails about potentially being able to increase your loan amount if you want to. So if you need additional EIDL, they've raised the limit from $150K to $500K. And it used to be 6 months of operating expenses. Now you can get up to 24 months. Also, it's going to be dependent on credit and different things like that. So it's not guaranteed that you will be offered a loan increase, but you might be. And if you want to see what the impact of that would be on your payments and your interest amount, grab my tracker. So you can do all kinds of calculations and figure out what your interest is. You'd probably be surprised as to how much interest is already accrued on your EIDL loan. If you're just holding on to it for a rainy day, just in case, you might want to get the tracker and see if it's worth it based on the amount. Because I know it sounds low when you say 2.75% interest, 3.75% interest. It sounds low. Sounds like, oh, it's not too bad. But the way that interest works is it's front loaded, you guys. Okay. So you're gonna have more interest in the beginning. It's just like a mortgage. More interest you pay in the beginning, less at the end, which means it's a lot higher than 3.75 times your loan amount is what you're accruing. So that's just something really important to know, and grab the tracker and understand what's going on with your EIDL loan. Because I think some people have been surprised as to how much their balance had increased just while they have it. I am not expecting that. Is it possible? I mean, maybe. I really am not expecting that they're going to, especially because they've had this PPP loan program and other things like that available. And they had the advanced program. I do not believe that they will forgive these loans. It's not even being discussed. So I'll say that it's not even being discussed for a full scale, forgiveness. We know things change, but to me, I would not take out a second draw if you don't expect to repay it. You're going to want to and be required to repay all of this. Okay. Let's see. There is someone, I am not doing one-to-one services, but I have a very good friend who is. We posted her information a minute ago. Let me go back and find it. Her name is Christy Stone. She is doing, here we go. You can schedule a call with her for a consult on ERTC. And Christy is great. And I know her, I've known her for years and years and years. And so she has offered to do these for our group. And actually, if you use her link, you can get 75% off. If you use this link, you'll see there's two different, I think on this one, you want to make sure that you go with the one that says Balance CFO Referral. That's my company name. Use that one to get 75% off, or not 75% off, $75 off a consult with Christy, specifically on the employer retention credit. It is so worth it, you guys, the amount of the consult versus the amount of money that you can save by claiming this. If you're an employer, I need everyone to please be paying attention to this. We ignored ERTC for a long time because you couldn't get one if you got a PPP loan. That's not true anymore. And ERTC is huge, you guys. It's huge. It's huge. It's huge. It's huge. Okay. All right. I am done. I am out for the day. Happy Easter to everyone who celebrates. Happy weekend to people who don't. And I hope that everyone has a wonderful and safe and happy weekend. And I will see you guys back here next week. Bye, guys.